Okay, we are live. Okay, so the purpose of these weekly tax and Bitcoin mining Q&As is to clear up a lot of the confusion that people have in regards to investing in Bitcoin mining and what the tax implications are. We'll try to target people's unique situations, but a lot of it will be more general to just point people in the right direction. And I think this is important to be doing now. And the reason that we're doing it is because there's about 60 days left in 2025. And if you want to take advantage of decreasing your tax bill in April of 2026, then you have to do something within the next 60 days. I do sooner than later, because specifically if somebody was investing with simple mining, like there's going to be shipping delays, the holiday season, like we can't guarantee that you're going to be online same day as payment if you're purchasing machines on December 25th or something like that. So I think we'll just jump straight into it. For someone without any business entity, we'll just say like a W-2 worker, what would be the first step in the process for, like, they've decided that they want to invest in Bitcoin mining machines? What is the first step on the tax side? Like what should they start thinking about first?
The first thing is, consulting with somebody that understands businesses in general, right? You want to treat this venture like a real business. Number one, that's really important when putting everything together for liability purposes, for IRS filing purposes, material participation purposes. You want a legal entity protecting the Bitcoin, the machines. This is an expensive industry to get into, but it's also a great industry because of the way that Bitcoin is starting to gain tremendous traction in our world today. So making sure you've got the right person to guide you through that process is important.
Okay, so thinking about it, like I need to structure it as a business, and I need to go meet with a professional to help me do that.
Exactly. Yep. I wouldn't take this on your own accord to set up a company. There's a lot of nuances to making sure that's done properly, and then the accounting is the next side.
Yeah, and it's also going to take a lot of time. Like if you wanted to do all of it yourself, then you're effectively trying to just become your own CPA. And then even if you do that, you're probably going to make some mistakes and you're making the risk of an audit. Or if you want to just save yourself time, then you could work with someone like yourself. And I think we covered this actually yesterday in the webinar. Are any CPA fees and entity formation costs deductible? Which they are. Is that correct?
Yes, 100%. It's all part of the organizational setup costs for the business. Even if you don't move forward with the business, you can deduct the expenses on your return.
Okay.
So imagine you form the business, but you never purchase any equipment. And you're like, I want to pivot. Well, you file a tax return, you deduct the few $1,000s it takes to set everything up, and you've got a loss. Okay. And then you could shut down the company.
Yeah, even if you form, let's just say you form an LLC and you have like formation costs associated with that, you never end up purchasing miners, then you can like deduct the cost of that formation from your personal tax.
Right. I mean, you're not going to get a dollar for dollar benefit, but if it's $1,500 to set this up and you never pursue it, you take a $1,500 loss on that company and you write it off. It'll save you, figure 30% on your tax return at the end of the day. Yes, you're losing money net, but not all is lost. Even if you just explored the opportunity to get involved with mining.
Yeah. Okay.
And you could always repurpose the company.
Yeah.
Like if you want to pivot,
it's valuable to have an LLC for a variety of things that you'd want to be doing.
Right.
A common question is, what is the best legal structure? Like people are thinking, well, do I go LLC? Do I go with the S Corp, single member LLC, multi-member LLC? I mean, I've even heard of like people using a trust. What how should they be looking at all of those options?
So it depends. There's a lot of different nuances to why somebody would advise you to do something one way or the other. For example, if you have a friend that you're going into partnership with, the easier structure is the LLC, a Form 1065 partnership LLC tax return with that friend who's your partner, and that would be the easiest structure to move forward in that situation. Why? Because if one day you want to add $50,000 more to purchasing more equipment, but your partner doesn't, you can allocate more of ownership easily over to your side of the K1, and it's a pretty smooth process as compared to an S corporation where you can't finagle and adjust equity balances so easily. You'd have to issue stock, and it gets a little messier. But if you're getting into the business on your own, I would go with the S Corp type entity in this situation.
Okay. So even if you weren't going into it with a partner, you would still recommend the S Corp option?
Yes, 100%. Why?
When would it make
Because
sense to go with an LLC then?
if you're a single member LLC, it's all filed on your personal 1040 tax return.
And that's the main reason that you don't like people choosing the LLC option.
Right. Single member LLCs, it's a simpler form. Don't get me wrong. It makes it really easy for us as accountants because I don't need to do a balance sheet. However, you're putting everything on your 1040 and laying it out to IRS. Schedule Cs are very easily and highly audited. Not that you need to worry about an audit. Okay, don't get me wrong, but separating the filing onto a S Corp is a totally separate tax return. A K1 comes over to your personal 1040 and you pick up the gain or loss there, which it makes one more layer of protection for you from IRS audit inquiries.
So it's just like the level of commingling, essentially. Like if you're going the LLC route, then you're very much tying your mining business with your personal side. And if you go the S Corp route, you're clearly dividing that.
You could still treat the LLC that is a single member as a separate entity. It can get its own bank account.
Yeah, but if you wanted to get the
commingling
through, like if you wanted to get it to reduce your personal tax burden, then that's where it's going to show that connection.
You're going to get the same benefits essentially either way. Single member LLC, S corporation. At some point when your business becomes profitable, the S corporation can save you even more money because you don't have to pay the full boat of self-employment taxes as you would have to do under a single member LLC. Now, it gets a little complicated. There's the rule of, reasonable compensation when you're an S Corp owner that you need to pay yourself on a W-2. So if you had $100,000 of net profit on the S corporation, the argument is between 30 and 35% should be allocated to a W-2 to yourself. So you would have to pick up that as W-2 income, which requires payroll taxes, self-employment taxes. That's what you're skipping when you do the S Corp, because the full $100,000 of net profit on a single member LLC would be subject to full self-employment taxes. Whereas with the S Corp, only the $35K W-2 is subject to the self-employment tax. The rest is a dividend or distribution from that S Corp, which is only taxed at your ordinary income tax rates, which are lower than the self-employment tax rates.
Okay.
So that's the nuance that you need to be aware of. That's why the S Corp can be even better.
Okay. So I think that gets into like how an entity choice affects your self-employment taxes and pass-through income.
Correct. There are, like, knowing what your other income sources are. For example, if you're a really high earner, you're over the FICA cap. You're paying in the max Social Security.
What is the FICA cap?
Around 170,000.
And then what does that mean?
That means that you've paid in the maximum amount of Social Security tax for the year. If you're over that number, any additional income that you have isn't going to be subject to Social Security tax.
Okay.
So if you're under the 170 threshold, for example, we have more wiggle room to save you more money by doing an S corporation.
Okay. And so if you've paid, as soon as you hit that, as soon as you paid $170,000 into Social Security, then what does that mean for your mining business? Like you
won't need to pay on the W-2, right? So officer salary, W-2, reasonable compensation side of your mining business, you actually don't need to have Social Security taxes withheld on that W-2.
Yeah. Okay, so that's why the S Corp would make sense then.
Yep. And then in addition, you've got the separate tax return, right? That's really important. Separating the return, getting it off of your personal, and having a completely separate entity being handled. When we do work for some clients, they may want to continue to use their same accountant that they've been with for 30 years. Totally fine. You can have another accountant that does the business entity filing because maybe they're more specialized in a specific industry. You have a different relationship with them and they're maybe more attentive on the business side than your personal accountant who may not do business returns is. So, that's another reason you don't have to be worried. Like your personal CPA is not going to be upset that you've got a new business company that needs to be done and you didn't go with them. They may be like, okay, great. I don't know this stuff. I don't know Bitcoin mining. I don't know crypto. I don't want to learn. And that's where, a lot of the work that we've been doing with you guys has come in because there are a lot of firms that just don't understand this industry yet.
Yeah. I think what is it possible for a non-US resident to form in the United States to mine Bitcoin? And then are they like how exactly would the taxes work for them?
Yes, they could form a foreign-owned LLC. That would be the best.
So how would the taxes work on? How would the taxes work on that then?
They would have to file. They would have to file a partnership return, Form 1065 in the United States. They'd be issued K-1s. They'd have to file a 1040 non-resident tax return, picking up the K-1 income from the partnership.
Okay, so would they be taxed like based on Iowa taxes in the United States and then taxed again, like if they're in the UK for whatever the tax rates are where they're actually living?
They would probably get a deduction on their UK return for the taxes paid to the United States. I don't know. I don't file taxes in Europe. I don't know how it works, but I could tell you when we have a client that has.
Have you worked with a client that's been like foreign, like in the UK, for example?
We really don't have many clients that are outside of the United States.
They'd probably be better off working with like a tax professional in the UK that knows like their tax law better.
Right. It's certain entity types. If you've got a C corporation in the United States, that's simple for us to handle. LLC, we can handle that. But once we get into the personal payment of taxes of pass-through entities, I don't know how the international taxes and those laws work. That's just so many rules that can come up. I know I could give you the example of what happens if you are a resident of the United States, but let's say you're traveling the world for the whole year, 365 days, and you're working remotely for your software development firm. You don't get double taxed. You get a credit for you can get like a foreign earned income exclusion, and it's like $140,000 that you can exclude on your 1040 return because you've been outside the United States. So there are situations where if you're still a resident of the United States, but you lived outside for the whole year, and worked for an employer, there's different tax rules. We're getting a little bit down a rabbit hole here that
that's
won't
very
really apply.
niche.
So
Yeah.
there's so many different nuances that it can get complicated. So
maybe what would be the, like, what if you lived in Dubai or Puerto Rico? Like, are there any, because I think this is getting into, if you're mining Bitcoin with simple mining, or really if you're doing any hosted Bitcoin mining, the proper way to do it is you should be, or at least should be, forming your business entity in the state where those machines are physically located. So in the case of mining clients, like, it would be in Iowa, correct?
Yeah, so Iowa's going to be the tax home for where you report your taxable income from this mining business. And the reason is because that's where the machines are simply located.
And if you're not doing that, then you're doing it wrong, essentially.
If you're not doing that, you're doing it wrong. Correct.
Okay. And so is there any benefit then to, let's just say, someone who lived in Iowa, they formed their LLC in Iowa, versus somebody who lives in Dubai and has the LLC in Iowa? Like, are there any, would it just be the federal taxes would be the difference, or is it both essentially the same thing? Because Dubai just being an example of zero tax.
They still have to file federal and state taxes.
They would have to pay federal in the United States?
Yep. And Iowa state taxes. Yep.
Okay. So it really only, like, living in a zero tax jurisdiction would only be beneficial if the miners are physically located there?
Correct.
Okay. And I mean, we're mentioning this, like, this kind of concept of the audit risk, like, oh, you want to avoid getting audited because this is going to be a terrible thing. Like, what kind of risk is how probable is it that somebody would actually, I mean, I know it's hard to say that, but, like, if somebody's doing it wrong, let's just say they don't form in where their machines are physically located, or they're going the single member LLC route and they're kind of mixing it with on the personal side. What's, like, the actual risk of somebody getting audited, and what does that even mean? Like, what is that going to mean for somebody if you get audited by the IRS?
Yeah. So, I mean, the risk is fairly remote these days. Pass-through entities themselves are less audited now more than ever. The amount of bandwidth that the IRS has been dwindling down, as we can see from just the news and what's going on with budget cuts, and the government's currently shut down right now, so they're not sending any. Yeah, you're not getting audited right now because nobody's there to work. Yeah. But I'm not overly concerned with the audit landscape for this industry. Mm-hmm. I'm just telling you, if you want to protect yourself and be set up the best possible way, that these are the things that I would do if I were you.
And you would do that because you don't want to get audited.
Who wouldn't?
Yeah.
Who would rather? I mean, who would? I don't.
Well, like, some people are comfortable taking the risk of an audit. Which
an audit basically is.
What does an audit even, like, mean?
Yeah,
like,
I've dealt with them.
Audited, what happens?
I've dealt with them for C Corps very infrequently, on S Corps or LLCs, very rare, but a couple C Corp audits have come up. Individual audits are really different. So let's talk about the business audit. They want to verify income, number one. A normal business that got audited, the auditor would go to the bank statements for the whole year. They want 12 months of bank statements. They're going to add up all of your cash deposits.
Yeah.
All deposits in general, credit cards, checks. They're going to add up all your deposits. They're going to say, okay, the deposits that you have are $1 million, but on your tax return, your deposits were $850,000. Why? What's the difference? Maybe it's answerable. Maybe you took a loan and the IRS agent didn't realize $150,000 was loan proceeds and they missed it. I had that caught. We caught that in an audit. Multiple loans came in from different loan providers, and the IRS agent just took out all the deposits and said, "Hey, your income's $1 million." No, it's really $850, sir, ma'am. Yeah. We had to correct them on those things. Yeah. After that verification of income, and as long as everything was squeaky clean there, then the process goes towards the expenses. What are the expenses that were taken on the return? Normally, they're going to ask for 4 months of sampling of expenses. For example, give me this category of auto expense for June, July, September, and January of the year 2025. And I want to see the receipts for those expenses that are on your general ledger in your accounting records. And if you could produce that, they don't need to go any further with that category. They'll sample many other categories too. They'll usually hit the big ones. A lot of people inflate travel and meals and entertainment. And the reason is because those are the biggest areas that you can kind of disguise as a business necessity, right? I traveled to a work conference. I traveled to meet with clients. No, you're not. You were on your honeymoon in Honolulu. Prove it. If you could prove it and substantiate it, great.
What happens if you can't prove it? Like, let's just say they come, oh, you spent all this money on all this stuff. Like, can you prove that this was related to business activity? And let's just say like you didn't take any proper documentation of it. Then what happens?
Then they throw out the expense and you pay the tax return that would have been recalculated without having that expense on it.
Okay. So that's what they're doing in an audit, is they're like trying to see if anything that you did was incorrect. And if they do find something that was incorrect, then they just like revise your bill and you have to pay more.
Correct. Now, the worst thing to do is to underreport your income. A lot of Bitcoiners don't like reporting their capital gains. That's the worst thing you can do. Miners, they all ask about KYC, non-KYC.
Yeah.
If you don't report your income, the penalties are way worse for underreporting of income than overstating expenses.
Really?
So if you're interested in, finding a way to shave money off your taxes, report your income in full and take the gray area of expenses that might pass on the tax return and use those aggressively if you want. Don't not report your income properly.
Is there a way for someone to do all this without like KYCing themselves? Like their mind, because that's like a benefit of people mining Bitcoin, is like they don't have to go through an exchange. They're mining it directly from blocks to their, let's just say they're not using Coinbase. They have their own cold card wallet and they're using a decentralized exchange. Like if they're ever trying to swap back and forth between dollars and Bitcoin, like, is there a way to do it without like sending it to Coinbase? And Coinbase obviously has your identity and like that's all tied together with your taxes.
Yeah, I mean, if you're trying to get your Bitcoin converted to US dollar and you don't want to go the traditional exchange that's going to KYC you, there are ways of doing that.
Let's just say that you never, like, you're mining Bitcoin and you never want to convert it to dollars.
Borrow against it forever.
Yeah.
That's one way to do it. So you don't realize the capital gain.
Yeah.
But
there's no way to pay your taxes anonymously, correctly. Is that correct?
No, you need a social security number.
Yeah. Even if you have like a business entity, you have to have a social security to create that, because it's a business entity is going to have an EIN, which is like the social security number for your business. And in order to create that, is there any way that someone could be like paying taxes through a business that they didn't have to give up their own identity to create?
Yes. If you form a C corporation. Okay. Certain states don't disclose, like Wyoming. Wyoming doesn't disclose the owners of the company. It's kept private. So nobody can go look you up and say you owned XYZ C Corp that was formed in Wyoming, because they don't disclose it.
Yeah. You're just going to get double taxed if you're doing a C Corp.
Yes, it's set. C Corps are appropriate for specific purposes. If you're going out and raising capital, a lot of PE firms and venture capital would want to see even LLCs converted to C Corps, because the share structure is a lot different in the C Corp. if you're trying to go public one day, a C Corp, is the route to use if you're going to go IPO.
Yeah.
But that's one way to do it. Yes, you're double taxed, 21% federal tax rate plus whatever state you're mining in. C Corp gets taxed at that state level as well.
Mm-hmm. Well, I think I kind of want to just clear this up a little bit more would be, let's just say I live in Montana. Am I able to form my let's just say I go on LegalZoom, I create my LLC in Montana. Am I able to use that for my machines physically located in Iowa? Or do I have to go on LegalZoom and register the LLC in Iowa for those machines? Like I can't use my Montana LLC for my machines in Iowa.
Well, you can use your Montana LLC for Iowa, but you need to register it in Iowa as well.
So how would I do that?
It's a foreign entity qualification form filled out with the state of Iowa, Secretary of State Business Division or of Taxation. There's every state has their own revenue and taxation department, and that's where you fill out these specific forms that register your company into that specific state. Because now we've got nexus in that state, we've got operations in that state. If I had an employee in that state, that's a nexus, that's a connection to my originally formed entity in Montana.
Yeah.
So
it's kind of like a franchise. I mean, this is probably a stupid example, but like a franchise. Like I have it formed here in Montana, but I can also register it in Iowa as well. So you don't technically have to register the main one that you create in Iowa. You just need, or I guess form it in Iowa. You just need to have it registered in Iowa for those machines located in Iowa.
When you create a new business, it's always started at the state level first.
Yeah.
And then you file with IRS at the federal level to get your tax ID number.
Yeah.
And then from there, you can file the registrations to do business in any other state that you want where you're going to be doing work.
Yeah. That makes sense. Okay. We've covered a lot and gone pretty deep on some of these topics. I think the next good one to cover would be depreciation and deductions. Maybe if you want to break down the most important sections that pertain to miners, maybe section 179, section 168, and how are Bitcoin mining investors using these strategically?
Absolutely. So section 168 relates to the bonus depreciation, and under the One Big Beautiful Bill that just passed in July 2025, you can use 100% of your purchase of equipment to expense it on your tax return, giving you a big savings.
Which I've heard some people say that hasn't been like updated on like the IRS.gov or something, where it's obviously clarified by Congress in the One Big Beautiful Bill, but it hasn't been like, they haven't translated that over into the official like IRS.gov, what they say the guidelines are. And so some people are like, well, I'm not going to operate on that basis because the IRS hasn't confirmed it. Like, do you see any people that are having that concern?
I have not heard that concern. And if they're slow to,
because it's going, I mean, eventually it's going to come over, and they're going to recognize like this is obviously legitimate.
Yeah, I mean, I have not heard that, so I would totally disregard that if what people are saying is that it's true, but it's not. You can 100% expense the depreciation, the equipment for depreciation benefits. You mentioned section 179.
Yeah.
A lot of people have heard that term, but there's nuances to when it can be used. And specifically, it can only be used when you've got net profits in the business to offset the section 179 election of equipment against. For example, if in 2025 I use bonus depreciation on $100,000 of equipment, and I've got a loss on my S corporation.
Yeah,
I mined a little bit of Bitcoin, nothing crazy.
You're gonna mine maybe 30K Oh, like
Yeah.
if you bought it for 100 in January, you're gonna at the end of the year you'll maybe mine $30,000 worth of Bitcoin.
Right. That's 2025. 2026 comes around, you're mining, you've got profits, right?
Yeah.
You got electricity, reduces the profit a little bit. Now we've got 50K of profit. Then I could go buy more equipment and go with this section 179. But guess what? I don't need to. I could still bonus it out and use the 100% bonus election just the same. And it could take me negative. Section 179 stops at 0. It doesn't take you negative. So the taking of a loss in a situation where I buy 70,000 of equipment with 50K of profit can only happen when I use bonus depreciation. That takes you to a negative 20. If I use section 179 on that equipment, it's only going to take me to 0. And then it carries into the future.
So why would anyone want to use 179 when they could use bonus through 179?
Different businesses, different industries, section 179 may work better than using.
Can you give an example?
So manufacturing businesses, there's certain equipment that might not be bonus eligible, but might be section 179 eligible.
Yeah.
So you'd have to go through a specific type of equipment and look at the list. Does it qualify for bonus? No. Does it hit section 179? Sure. Then use section 179.
Yeah. So then for miners, like 179 is not super relevant.
I think it's totally irrelevant for miners. While we have 100% bonus depreciation available, you don't even need to consider section 179.
Good to know. Okay. Let's jump into, can you depreciate used? So let's say somebody, like you can either purchase new machines or you can purchase, let's say someone went on the miner marketplace and they purchased a used Bitcoin mining machine. Does that also qualify for 100% bonus depreciation?
Yes, they can use the 100% bonus expensing on used equipment. Yep, that was all part of the new law that just passed this July.
Okay. What documentation is required to support the depreciation?
An invoice and then proof of payment. Just because you have an invoice doesn't show that you paid it. You got to prove that you paid it. If you're audited, they're going to want to see a check that's been canceled or cleared by, you guys, of course, or a credit card credit card line item on like an Amex statement showing that you paid it.
Okay. So it doesn't necessarily have to come from the hosting company. It could be on your end, as long as the funds went out of your bank account. Then, or how would you prove that with, like, let's just say a client paid in Bitcoin and the hosting company didn't send them confirmation of payment, then they would have to send like a documentation.
I'll tell you. They'd have to show the block transaction. They'd have to show that
space. Yeah.
You got to use mempool, right? Whatever. You got to go to your wallet and show that there's a transaction activity history for one Bitcoin going out.
Yeah.
And going to a wallet that is owned by Simple Mining. How do they prove that? They probably have to ask you guys.
Mm-hmm.
That would probably be the best way, or you provide them a statement showing that they've received and applied that one Bitcoin of payment towards your invoice, and it's no longer open. It's been paid and satisfied.
Yeah.
So that could be a little tricky when you pay in crypto, but that's the nature of the business that we're in, tracking all of this, so it makes it easier.
Yeah. When does is there any difference for depreciation if like someone is going the hobby miner route, they're doing it all personally, they don't have a business entity structured? Can both, like there's one investor that has an LLC or an S Corp set up, the other investor has neither. Could both of them in theory take advantage of 100% bonus depreciation?
They cannot. Hobby miners are not able to use expenses, but guess what? You still got to report the income. Can you imagine? So,
don't want to be a hobby miner.
You don't want to be a hobby miner.
unless
It just doesn't make.
unless
I
you
mean,
like paying taxes.
if you're not in it for the real operations of the business,
Yeah,
okay, it's a low audit risk. It's a low level of work on your part to have a few miners, and you don't care about taking the deductions, but you want the Bitcoin. Okay, then hobby mine. You just can't take the deductions. That's all.
yeah. You won't be able to decrease your personal tax burden. If you have
No.
a large tax burden at the end of the year, you made hundreds of thousands of dollars, and you gave the IRS a bulk of it, and you want to decrease that, then you couldn't do that if you're just going the hobby miner route.
Correct. The IRS, they'll look at a bunch of factors. Do we carry on the activity as a real business using separate bank accounts, separate set of books? Do you study mining? Are you aware of the industry? How substantial is your time and effort? Do you expect Bitcoin to grow in value? Right.
Yeah.
These are all different factors which makes the IRS determine whether you're doing something as a hobby or you're doing something for business purposes.
Yeah. I think this gets into the active versus passive income side of it. Like, you'll see a lot of mining companies say like, oh, Bitcoin mining is passive income. And like, zooming out as a client of Simple Mining, it, like, if we're just using the word passive, you don't have to do, that's the point of it, is like, we manage all the operational complexity for you. You don't have to go in there and see if your machine is online and make sure that it's hashing correctly and doing all this stuff.
I mean, I would probably change the way you just said that, because as the owner of the equipment, I do want to make sure my stuff is online. I do want to make sure that I'm following up with the team at Simple Mining, taking care of the repairs if it is offline. Managing that process counts towards your hour requirement.
Yeah.
So I would probably say that.
Yeah, but actually, like, being like boots on the ground, managing the machine. Like, you don't do that as a client of Simple. And some clients, I would say, like, they want to be hands-on or they want to be hands-off. Like, they want to just mine Bitcoin, they want to receive it. They don't want to worry about what pool they're using or all the different things. Like, it really is like, if we have to use the word passive, like, it is somewhat passive for them. The Bitcoin's just coming into their wallet. We manage all the operational complexity. They don't have to do that. Can that person still, like, the IRS wants to know that it's active. Can that person who wants to be hands off, can they still take advantage of that tax benefit? Like, it is passive for them. Like, what do they have to do? They have to go log into their dashboard every single day and click a couple buttons to show that it's active. Like, how does that work?
You've got to be able to support 500 hours in a year in the industry. Here's a few, like, material participation tests that people should be aware of. You spend greater than 500 hours in the year. You monitor rigs. You manage hosting contracts. You troubleshoot performance. You negotiate power rates. You probably don't perform repairs, right? But the amount of time that you guys spend on a repair, it doesn't take a tremendous amount of time. Maybe an hour and a half at most on repairs. Research, upgrades, buying machines, selling machines, right? All that time spent counts towards you achieving the hours.
I think it's easy for someone to then jump to the conclusion of, like, if you're investing in Bitcoin miners, you're likely bullish on Bitcoin. Like, you think about it as an investment. You watch the markets. Could all of this time, like, let's just say you watched Jerome Powell the other day talk about cutting rates and how the economy is doing, and that's like, maybe that could pertain, like, that has some relevance to your Bitcoin mining investment. Could all of the information that you're consuming related to markets and Bitcoin, and therefore your Bitcoin mining investment, would that qualify as it being an active income source?
No, because you could easily make that up, and it's not provable.
Well, could you not just, like, you could keep a time record of, like, oh, well, today I spent 6 hours researching markets in Bitcoin related to my Bitcoin mining investment, and like you just keep a log like that, then that would be your proof, right? No,
Not good enough.
not good.
If you're trying to claim that your research of reading articles and books is documentable as hours, not good enough. How do you prove that? You have a log and you say you did 5 hours of reading today. How do you physically prove that? Do you want to record yourself and take a video of yourself reading? It's a lot of work.
So
I don't
what are
recommend
the
it.
other, how do you like prove the other stuff?
Most software programs like QuickBooks, they have timestamps when you log in and out, right? So you could take the timestamped logs, the audit logs of any record keeping software that you're using. That's one way. Traveling to conferences, maybe they take a visit to Simple Mining's offices to get a tour. That stuff counts. Here's the thing. Once my machine is plugged in, right? You've got a few employees manage the site. They're not just sitting around, but there's not a lot of like, they don't have to go hold the Ethernet cord plugged into the back of my miner. So they're pretty hands off in the end. They're managing a site that has 3,000 machines. Maybe some sites have more. If you divide their time over the course of the year, amongst all of those units that they oversee, I would say that your time involved with managing the business is greater than theirs. Right?
Yeah. I would,
if you do a
machine basis.
Right, on a per machine basis. This is the logical process that I would go through if I was dealing with an audit, right?
Yeah.
If I can show that I did 100 hours and I was the most active person in my business, including the outside contractor, which is you guys, as long as I can prove that I did 100 hours, I was more active than you, I qualify for material and active participation. So the 500
and the way
hours,
that you prove that is through timestamps of you logging in and out of certain softwares.
that's one. I said there's also the travel aspect. There's also visiting and checking out your site, getting a tour of your site, networking conferences, anything you could think of that can
Yeah, but how would you prove a network? A network, you would show like your receipt to pay for the gas stuff. Okay.
Yep. I flew to Vegas to go to the Bitcoin conference for 4 days.
What if you purchased a course it was a course that was 100 hours, and you bought the course, you have the receipt from the course, and would that count? But can you prove that you went through the course? I mean, you could, maybe if you got a certificate at the end, you could show that you received the certificate. Would that be something that would qualify?
So the area of like research, which is what I would consider a course.
Yeah.
I don't believe it applies towards the hour limit that you're trying to hit.
Even though it's like relevant knowledge to like somebody, like maybe they get into Bitcoin and they realize, oh, I don't know how the difficulty adjustment works. I don't know any of this stuff. And they have to spend, like, that's going to take a lot of time for you to learn all that information. None of that counts for anything.
I don't know. I'd have to just dive into the minutia and whether that's like a documented, legitimate area that you can use. From what I initially read, I would say the answer is no.
Really? That's kind of crazy, because that's like, that would seem like be one of the most active things that you would need to do is like
I said,
you need the knowledge.
If I could get you the source of the IRS literature and say for sure, yes, this works. Yeah. But if you want to take a quick glance at Google, documenting your research may qualify. But
I mean, this is just really
look, the bottom line is that this area is very, very unlikely to be looked at.
Yeah, so it's like people shouldn't be stressing out about like being very diligent in how they're calculating these hours, is what you're saying?
You need to be aware of the rules. Be aware of it. It doesn't hurt to be good at documenting your information. You got to do it anyway. You're the owner of a business and you need to keep good records. But to go to the extent of logging every single move you make for the year is going to be insane.
That's crazy.
You could do it if you got the audit letter later, and then you can go back during the year. If you kept the calendar on Google or wherever, you can go back through your calendar and use that as a guide to start with. Oh, I took a trip to a conference.
Would a calendar start? Like, let's just say you keep a Google Calendar or Microsoft Calendar, and it has all the time slots blocked for all the various stuff that you're doing. Then could you just use that as proof?
It helps your situation. Again, it depends on what you did during that time, and can you prove that you did certain things during that time. And it depends the extent the auditor wants to go through the process with you. Remember, they have to make money by auditing you. Otherwise, it's not worth their time.
Exactly.
So if they're going to uncover $15,000 of extra taxes because they found deductions that you aren't able to take, is it worth them stretching it out over 6 months?
Nope, absolutely not.
So it's the hazards of litigation. Not that you're being sued, but it's the hazards of going through the process. Is it worth 15 grand to them? They're better off going after bigger corporations that
and I think that's maybe a good thing for people to be aware of, is like, don't sweat like spending an insane amount of time trying to comply if like you're just evaluating the incentives. Like, they're not going to have an incentive. Like, if you're not being as I don't want to say that people should like cut corners and not necessarily be diligent with it, but you just want to be aware of both of those sides, to where like you don't want to be spending this insane amount of time if there's no incentive for someone to even come and look at what you're doing.
Right. And you want to do as much as you can to prove the active nature of this business. So, do things that help your case.
Yeah. And I think we went deep on this like active versus passive thing because it's important, because you see a lot of miners. Like, would you maybe say that if you're a Bitcoin mining investor, and like obviously in the eyes of the IRS, you want to make it seem as and it is an active business. So with all the vernacular and the wording, the verbiage of people saying it being a passive income stream, it's maybe incorrect to say that. And maybe just like if you're a hosted Bitcoin mining company, then maybe you should just keep the word passive out of it, because it could potentially cause complications for any of your investors and clients it's not passive for them. They are classifying as active.
They have the right to come and inspect their equipment. If they physically want to move it, they could come be there with you guys. Maybe you're supporting them in the process, but we're going down extreme levels here, but that helps your clients. If you button it up where like, we don't want anybody to come here, everybody's totally hands off, this is totally passive for you, then you're making it out like it is a passive business. So I would open the door up to allow people to manage things a little bit more. Are they going to? Probably not. They're really not going to. But one thing I was just thinking about is that not everybody needs to treat this as an active business as well. It can work okay for them tax-wise as a passive business too.
Mm-hmm.
It can offset rental property income. If you're a family office and you're big into commercial or residential real estate rentals, that's mainly passive income. Maybe you're an individual business owner and you've got a bunch of rental properties. That could be all passive on your tax return. Well, let's take passive losses from Bitcoin mining and wipe out my rental profits. It goes both ways. So every particular situation needs to be analyzed. It's not clear and cut dry with the answer for every person. It really depends.
Yeah, I think that's a good way to wrap it up. Is everyone's situation is going to be unique for the most part.
If you're that investor that literally wants to do nothing good luck documenting your time because it might be passive.
Yeah.
But if you take the proper steps and document and get invested into this industry, you're going to have a much easier time. And I think a lot of Bitcoin people are that way anyway.
Yeah.
They want to go to the conferences. They want to go visit you guys. They want to check out the site. They're involved with swapping machines and buying new ones. So it should be okay for most people.
Yeah. Well, this was really good, Mike. Appreciate your time. I think this weekly Q&A is going to be immense value for a lot of people. And we went deep on some certain topics, and there's a lot more to cover. The tax code was, we could talk about it.
Yeah, I mean, look, we've covered a lot. A lot of this stuff relates to taxes. I can probably say that we can run through that every week and it's just going to be redundant. But what can we do next week to make it more valuable to the listener? One thought in my mind is logistics when the business is running. Okay,
Yep.
We've got step one done. Setup is ready to go. We're mining now. What logistical things do I need to know how to handle? What are those resources? What exchanges? What wallets? What tracking programs should I be aware of?
Yep.
What banks should I be using? What loan programs and lenders are out there? I see and work with a lot of people that are coming from all different areas of the world, and everybody's got their own, resources that they like. So we could talk about that and maybe compile a list for people to benefit from when they go to do certain things.
Yeah, I'll get specific questions that people have as well, and it's going to be valuable for them. They don't have to schedule a consultation and pay $300. They can send in their question for an expert like yourself, and we'll cover it and give them some more clarity.
Awesome. It was great chatting with you, Billy.
You as well, Mike. Appreciate it, and until next time.
All right. Bye for now.
All right, man.